I don't have the money that is used so often. Is this a reason you aren't taking action?
I am sure one of you have heard someone say,
investors, I don't have the money.
you typically need money to buy anything. This is a common misconception that you need money to buy real estate. You have no money to put down, which may deter some sellers. That's why you want to sweeten the deal. I am Ashley Kehr, co-host of the Real Estate Rookie podcast, and today I want to talk about this excuse that is used so often. I don't have the money. Is this a reason you aren't taking action? This is a common misconception that you need money to buy real estate. You typically need money to buy anything. I want to give you an example of a property I purchased with no money down. My partner and I had a duplex that we found. We got it under contract with a cash offer, but we hadn't figured out the finance piece yet as to where we were actually going to get that cash. So here's one thing we did that changed this deal for us. We went to our lender and said, here is what we want to do. What can you offer us? The outcome of this one question led to us getting a 90-day unsecured loan for the exact purchase price of the property. As soon as we closed on the property, we went and we refinanced with the same bank for long-term debt that was amortized over 20 years and paid off the 90-day loan. The 90-day loan gave us the option to buy the property in cash without putting any of our own money in. We didn't have to put a down payment on a mortgage. After closing, we had the property appraised for the new loan, and it appraised for more than we had purchased the property for. So we were still able to pay off the 90-day loan without using any of our own money. This was in 2018. Would a bank offer that same deal now? I am not sure. We had used a small local bank with only about 8 branches or so. They were a lot more flexible with what they could offer because they were so small. I would start with these small local banks or credit unions for options like this. But remember, don't ask about this exact item, ask what they can offer. One of the most common ways to purchase real estate without any money is seller financing. When you purchase a property, instead of going to the bank for a mortgage, you are going to go make monthly payments to the person that actually sold you the property. The seller doesn't get a lump sum upfront for the whole purchase price. The first question is, how do you even get a seller to agree to do something like that? Why would they want to do that for you? Well, your first step is just asking. You will never know if you don't ask. If I am walking a property with a seller or am able to get face-to-face with the seller, I always ask them, are you interested in doing seller financing? If they say yes, then great. I am already calculating in my head the terms that I want to offer. If they say no, follow up with, oh, okay, I didn't know if your accountant or CPA had talked to you about the tax advantages. This usually, triggers a little light bulb moment on them, or a little bell goes off and they seemed a little more intrigued and they ask a couple more questions. If you want to learn more about these tax strategies, you can check out Amanda Hahn's book on tax strategies for savvy real estate investors. You can find it in the BiggerPockets bookstore. You have your seller that is interested in doing seller financing. Now it is time to set up some terms. You have no money to put down, which may deter some sellers. That's why you want to sweeten the deal. You gotta find some other way. Are you going to offer a higher purchase price? Will you offer a good interest rate? Will the seller financing only be for 2 years, and after that time you will have added value to the property and will be able to go and refinance with the bank and pay the seller back in full? There are many options to the actual structure of the seller financing and may take some negotiation. Without a bank being involved, there are less rules and more flexibility. The next best way we are going to discuss is assuming someone else's mortgage. Here's an example of a condition where this may happen or would be enticing to the seller. But remember, it's not limited to this example or this exact situation. Someone owns a property that is in need of repair. They don't have the money to repair the property. Also want to move from New York to Florida where they can move in with their daughter and her family. Their mortgage could be close to what the value of their property is. They are getting lowball offers where they would have to bring money to the table if they were to sell. Part of that reason is that interest rates with banks have increased and people aren't able to purchase the property at the price the seller needs because their payment will be too high each month with the higher interest rates. If they were able to get the same low interest rate the seller has, then they probably could pay that price, but they don't know what you are learning. There are loans that have language written right into the loan stating that someone else can assume your loan and take it over. There are stipulations. You just can't give your loan to anybody off the street who purchases your house. There is also a subject to where the language in the loan may not be assumable and you can't transfer the loan into someone else's name. That is where you work with the seller to keep the mortgage in their name and you take over the payments. This may shock you even more that someone else would be willing to take the financial risk by trusting you to take over their mortgage payments and putting the property in your name. They no longer control the property. This actually happens every day though. Once again, there are reasons where this is somebody's only option or their only way out of the property. Never know until you ask. If you want to learn more about this specific strategy or just creative financing in general, check out Pace Morby on the Real Estate Rookie Podcast, episode 236, or his new book, Wealth Without Cash, available in the BiggerPockets bookstore, which I'll also link below for you guys. You can also find money so that you aren't using any of your own. This is called OPM, other people's money. Taking out a partner is how I first started. I had no money and had this limited belief that you could only buy property in cash. I knew a friend had savings and I approached him to bring the capital to the deal and I would manage it. We bought the first house we looked at. It was crazy to me. The first person I approached was the one that actually said yes and became my money partner. I was buying a property with none of my own money. You can structure the partnership in so many different ways. Don't get too caught up in what is fair, how can I maximize return. You are taking action, getting started, having that momentum. It may be okay that you are not getting the max equity you deserve in the deal. I do want to give you guys a word of caution though. Going into deals with no money can leave you with little equity into the house up front. This gives you little cushion to exit the property. You want to make sure you have reserves. Doing these $0 deals should still mean you have some cash, a line of credit, or even a 401k to borrow against if you do not need to put money into the deal because it becomes vacant or needs repairs. You may have to bring those funds. My recommendation is 3 to 6 months reserves, heavy on the 6 months if it is an older property. The reserves consist of your monthly principal and interest payment, which would be your mortgage, but also your monthly insurance and your property taxes. If you want more rookie tips and advice, join us on the Real Estate Rookie podcast. You can follow my journey on Instagram at Wealth from Rentals, and you can find me on BiggerPockets under my name, Ashley Kehr. For more information on what it takes to get that first deal, visit the BiggerPockets bookstore and get your 90-day plan to find that first deal. Look for Real Estate Rookie 90 Days to Your First Investment by Ashley Kehr. Thank you for watching and keep taking action.